hey guys, here we are. I'm with Rob. Rob, you've seen him before. He's our trusted advisor in this game. So, hi Rob. Right. So guys, we're all doing this social distancing thing, and Rob and I really hate the social distancing because we're very social people, but here we are, we're doing exactly what we're being told to do. So we're coming to you live today from his house and mine. Hi Rob, how are you? How you doing over there?
Good morning, Michelle. Good morning, Michelle. Here we are.
I know.
You're in your office at home. I'm in my office at home. Saturday morning, 9:30, March 20, whatever it is, 29.
Yeah, it's been a crazy week. I don't know about you, but I feel like this week has been sort of inundated with all kinds of, this is what you got to do right now. And I've been actually busier, not only with just how to adapt to this new environment we're in of social distancing. So what we're doing is I'm doing a lot of virtual tours. I'm doing a lot of virtual conversations. I did a couple of virtual listing appointments where clients have literally with their cell phones been walking me through their homes and their homes. And then, Zoom has been an awesome tool. We're using Zoom right now, but it's been an awesome tool for having those listing appointments that we would normally be doing one-on-one. You and I are having conversations by video teleconferencing, which is, thank God we have these tools available, because it is, what I'm seeing and from what I'm talking with folks, everybody is still working. Not everybody. Yeah. There are people who have had to put pause. My son, for example, is a tattoo artist and he's on pause right now. Some folks that we know who own restaurants, they're on pause right now.
Yeah.
So those are the people we'll have to really support when all of this gets done. Support them now, because they're in a bit of hurt because their income has come to a halt. But by and large, people are home. They are they're online. They're searching for new homes, and they're giving me calls. So I cannot tell you how many calls that I've gotten. People, one of the things that has been a part of my practice all along has been doing virtual tours. And now people are calling me saying, I would like to see a virtual tour. Well, here you go. Go to my website at michellezelsman.com, look at listings, and you'll see all the tours that I've got available so that you can make some decisions about a home. And then we can decide if you want to have an in-person visit. And then we're practicing with lots of gloves and, I'm not letting clients touch anything. So business is still continuing. And I know for you, and I would like to hear, a little bit about what's going on with you. I know that you're still getting ratified contracts. You're still able to make loans, but I want to hear from your side, what's going on? What are you seeing? And where, the all important question, where are we with interest rates? And, so yeah. What you got to say, Rob?
That's a lot of questions right there.
I know it is.
But I can tell you that activity level high, really, really high still, which is kind of surprising. If you would have asked me when we did our last interview a couple weeks ago, what I thought was happening if we got to this point where, last interview that we did, we're sitting next to each other, and now we're not supposed to do that. And, I would have expected that, as a result of that, people are going to kind of take a little pause, but that hasn't happened. What I've seen is that, just to give you some examples, we had 10 ratified contracts this week.
How many?
That's a lot. And 10 people out there writing offers, had a lot of new pre-approvals. It doesn't seem like that the market has slowed down at all. What has happened for sure is that I've seen some changes, obviously, the way that the market's been working. One of the things that was quite interesting was I had a agent who wrote an offer on Thursday night, and 9:00 at night, she texted me a picture, and she said, "Hey, I just got word from the listing agent that we have the contract ratified." And she's like, sent me a picture of this package of stuff that she had on the passenger seat of her car. And what she had was a basket that had Purell, it had booties, it had rubber gloves, and it had masks. And she's like, "This is my realtor showing houses kit," And
yeah.
Funny because that parallels what I had heard from an appraiser friend of mine this week as well, where he's carrying booties, he's carrying rubber gloves, he's carrying He's carrying Purell, and it's like everybody's kind of doing the same thing. Where it's like when you have to have exposure where other people may have, be infectious, we'll say, then at that point people are trying to take as many precautions as they can. It also, I can tell you, hasn't been something where people have said, "Oh, I'm going to go hide under a rock in my house, and I'm not going to go out and buy a house." And so it's been an interesting thing to observe. But the market is still super busy. Whether it slows down a week or two or three from now, who knows? I've heard some of that. People have said maybe it does, maybe it doesn't. The market has been so active for so long, and there are still so many people that want to, it appears, buy homes relative to the number of homes that are listed for sale right now, that even if there was a slowdown and 30% of the buyers decided, hey, I'm going to put this on pause, there's still the 70% of the buyers who are out there who are going to continue on the path and the journey that they're on to actually locate a home. There's still that 70% is still probably more buyers than there are homes available for sale for those people. So you still have that problem that we had, which is multiple offers and not enough housing stock to go around for all the buyers who want to buy it.
And I'll just jump in there for a second. One of the things that I have seen just from some of my conversations with people that have been considering selling their homes, I am seeing some hesitation for people who have families that they have decided to pause and wait until the social distancing is being lifted, and because they just don't want to invite too many people into their home, people they don't know. So those are the people who they want to sell. They are signing listing agreements already, but they're putting the when they go on market, they're putting that on pause for right now. But so it tells me too that once we get past all of this, there may be a lot of people who are saying, okay, now I'm ready to go. And some of that has been that there are people who they've gotten word from an employer that they want them to move from Washington to some other part in the States, and their moves are on hold until the social distancing is lifted.
Yeah, I ran into a couple buyers this week that are DOD employees, military, or better civilian, but work for DOD. And I believe, and I'm not 100% certain on this, but I believe that there's some sort of travel restriction that was put in place until May the 11th. It came up twice, that date came up twice with two different sets of buyers. One that was active duty military that are in California that are trying to transition here to a job at the Naval Academy, actually. And then some other people that are civilian DOD employees that also moved here with job transfer, where they said, hey, we're not even able to come there until May the 11th. So there's some restrictions. I'm sure that there's going to be a lot of different things we're going to find out about over the course of the next several weeks, where different restrictions and different things. And this is a constantly evolving thing. There are a lot of things that that are different now than a week ago. There's a lot of things in our business that are different now than a week ago in terms of policies that have been put in place in the last week, and we'll talk about that as we get deeper into this conversation about the different things that have happened in the mortgage business and how we're trying to adapt to the maybe it's the new norm, but it's the current norm, and so we'll talk about that, appraisals as you're aware. So you asked also a little bit ago about the market, what's going to happen with the market. So I wanted to give you a little bit of data on that, because that's been an interesting thing to watch for over the course of the last 3 or 4 weeks. That everybody at the end of February, it seemed like we had a flood of people that were like, hey, rates are at an all-time low. We want to refinance our houses. Buyers, obviously, when rates are at an all-time low, they want to buy houses at an all-time low rates. So at the end of February, rates did hit what, a lot of people will say is going to be what was an all-time low.
Right.
And they were pretty stable for a week or two. And then there was an onslaught of business that happened, where it was unlike anything I've ever seen, where it was refinance activity, and it was also a lot of purchase activity. People were snatching up houses because it's like, oh, I'm going to buy one. I want to buy one when the rates are 3%. It's compared to 3.5% or 4%. And so what ended up happening was that was occurring at the same time the stock market was getting clobbered. And most people are aware of the fact that the stock market, if you look at it at the beginning of this week, was down about 30 to 35% compared to its highs were back, a month ago. And so what ended up happening in the mortgage market was you have an onslaught of mortgage loans. The people that are going to invest in mortgage loans, guess what? Their value, the money that they had available to them had been diminished and was a lot harder to come by. And so what ended up happening was last week, we saw rates increase in many cases on different loan types a percent from what they were the week before, which I've never seen rates go up a percent in a week. And what it was a real lack of liquidity in the market. And so we were seeing rates that were back up in the fours, where everybody had gotten accustomed to seeing interest rates in the threes. And so there was a little bit of wind, a little bit of information that kind of leaked out on yesterday, but Friday of last week, where people were saying maybe the Federal Reserve is going to step in. Well, Monday morning this week, the Federal Reserve stepped in and basically said, we are going to backstop the mortgage market in this country. We'll take you mortgage lenders, originate as many loans as you want. We will provide the liquid market that you want to be able to securitize those loans. So we saw interest rates drop significantly back almost to the same levels that we were seeing 3 weeks ago. So, we were quoting rates of 4.25% on a VA loan last Friday with no points. And then as of yesterday, it's back down to 3%, a little bit lower than 3%, and there's just been a lot of volatility. So it's been an interesting time to watch it. I talked about float downs a couple of weeks ago on one of the discussions that we had. Even more critical now, because I think that as this situation occurs with the financial markets, without question, we're going to continue to see some volatility. I think that with the Federal Reserve doing what they said they're going to do on Monday, assuming that sticks and assuming they don't change that guidance, it's going to be good for mortgages, and we're going to see that rates are going to stay low for a while. That would be my estimation. But again, there's so many factors that are at play right now. Very unusual time, with a lot of things that we've never seen before. So who knows what a week from now is going to hold? But the rates are really, really good and back almost to the levels that we saw, the lowest levels that we saw. We'll call it 3.5, 4 weeks ago.
That's awesome. All right, so now we have a contract. We get it submitted to you. Now you start your processing, and so the next step is going to be the appraisal. What's happening with appraisals? Are the appraisers able to get into these homes? Are they? How is the appraisal industry? How are they adapting to these new guidelines?
Yeah, this has been something that this week we've seen a lot of change on. Last week, so going back today's Saturday, so a week ago, the week before that, and talking to a friend of mine who's an appraiser, he said, hey, you know what? I'm geared up, and this is what I'm doing. He had basically the same kit. He had basically a kit in his car where he had masks, he had booties, he had rubber gloves, he had Purell. What he was saying that he was doing was he was encouraging the homeowner on refinance appraisals or the agent and or seller on purchase transaction appraisals to meet him at the property, to open the door for him, to turn all the lights on for him, and to follow him around so basically he didn't have to touch anything inside the house.
Good.
An appraiser with every loan type had to go through, we'll talk about this here in a minute, had to go through and do an interior inspection where they have to look at certain things and take photographs. Well, if he can walk through, or she, as an appraiser, can walk through with a camera and click, also follows him around, they're making the job done pretty quickly. And so that's what he was encouraging every client to do, was to meet him at the door. He would be there at a certain time and walk through. So that obviously, a lot of the homeowners, a lot of the agents, people are sensitive to social distancing things. So there's been pressure on the agencies that provide us as lenders with guidance on how we're going to adapt to the current situation. So earlier this week, Freddie Mac and Fannie Mae, who are the primary purchasers of what are called conforming conventional loans, which is a big chunk of the business done throughout the industry, came out and provided some guidance and said, hey, we will allow for a traditional appraisal, which requires an an interior and an exterior inspection. We will also allow for what's called a drive-by appraisal, where an appraiser will not have to do a physical inspection on the interior of the property. They will be able to come by the house, take photos of the outside of the house, walk around the house, but then not complete an inspection of the inside of the house. They also said that they would allow for a desktop appraisal, which a desktop appraisal is basically where an appraiser doesn't even go to the house at all. They do all their research based on data that's out there. They look at listing data, comparable sales data, and they're going to provide a value of the property without actually seeing the property. And so that got incorporated into the industry pretty quickly, whereby, I don't know, what Wednesday or Thursday of this week, we were in the cases where a desktop appraisal was permitted. That's what we are now ordering. And a lot of other lenders, I think, are doing the same thing from what I've heard from some other friends of mine who work for the mortgage companies in the area. Just yesterday, VA came out and said that they were going to allow for some variation of either a desktop appraisal, or I think what it's going to end up being is going to be an exterior only inspection, is what I had heard. Yeah, so I haven't seen the formal VA guidance on this, but I was on a phone call yesterday afternoon at 4 o'clock. Obviously, we're having a lot of phone calls with all the changes that are occurring in our business. But I was told then that VA had provided some guidance on, hey, we're not going to require interior inspections now either. So FHA loans still are requiring an interior inspection, at least for right now, and the jumbo loans are. But this is a constantly evolving thing. I think it's something that the industry is trying to be sensitive to. Hey, we're still going to provide the protections that we need, so we can still generate loans that are good, solid loans without the risk of, hey, we don't know anything about the property itself, but also being sensitive to the fact that, hey, people don't want a stranger inside of their house, and so this will be a constantly evolving thing. It's probably going to be a different week from now than what it is right now.
Yeah, I think one of the things, and it occurs to me, and this is just how I've been doing business anyway, but I think it becomes very important for the listing agent. So for sellers, if you're thinking about who you're going to have as your listing agent, make sure that they, at the beginning, before you go on the market, one of the things that I always ask for, a survey that maybe you had done when you bought the property, provide that. Provide a list of all of the updates and any kind of changes and modifications you've made to the house, so that when the appraiser is coming through, we had an appraisal ourselves this week. And one of the things that we did, it was a vacant home, so he was able to go in and, all prepared and everything, exactly as you're talking about. He was letting me know that he's got his gloves, his booties, his, mask, the whole 9 yards. But I was able to also provide to him a copy of the survey, a list of all of the updates that the sellers had put into this house with dates, the whole 9 yards. And so it helped him tremendously, because nobody was there to meet him, and he was able to bridge the gap of that information that becomes critical in the appraisal.
Right. One of the things also that was kind of interesting was, we've got here locally, haven't had a firm shelter in place, kind of put on us, but in other parts of the country they have. And one of the interesting things was that appraisers, mortgage people, and realtors were apparently deemed to be essential employees. And so we're still able to go out and do what we need to do to keep the housing market moving in the right direction. I think that's probably a good thing, because the housing market is such a large portion of the economy.
Yep.
And the impact remains to be seen. But we just on Thursday, there were over 3 million people that filed first-time for unemployment. We've never seen a number that's that high.
Yep.
Admittedly, it's a strange thing, and a lot of it was brought on by the fact that people are hunkering down, whether they are choosing to do it on their because they want to do it, or whether they're being forced to do it. Obviously, it depends on the area where they are, but certainly all of us are sensitive to it. We're seeing that people are changing their ways, and there's a lot of people that have been impacted negatively by that. Now, one of the things that I have also noticed, and we're just talking about just general changes in the business and how we all adapting to it. I think that's important for what we're talking about now, and trying to educate the people in our area about what's happening. One of the questions that's come up a lot recently has been this whole issue about how do you conduct a closing
Right.
where you typically have 7 or 8 people sitting around a settlement table and everybody's yucking it up and they sign documents and people are trading pens around, and there's obviously a lot of coronavirus issue with that process. Anybody who's been through a closing would agree it probably couldn't get much dirtier than that. So what has happened is that our industry is trying to figure out, okay, well, how are we going to mitigate that?
Yep.
And so it's been interesting this week also to see what's happening. So number one, talking to some title company people that I know, they are trying to minimize the number of people that come into their offices. They're basically saying, agents, we don't want you in the office. We want the buyer to come. We want the seller to come. We want them to be here for a minimal amount of time.
Yep.
We don't want people to hand us a check. We want people to do wire transfers. Makes sense. So what we have done, and we've been using this process for a while, we use a process called flash close, where if somebody had a closing yesterday, okay, Friday, then at 12:01 a.m., so just after midnight yesterday morning, the entire settlement package is there for the buyer to sign electronically. Okay, and as most of you know, there's 50, 60, 70 pages depending on loan type of variables of documents to be signed. So there are only a few documents that technically need to be signed in pen and ink that are going to be recorded in the courthouse. What we're doing is about 95% of loans that we do, and there's only some unusual circumstances where somebody's selling with a power of attorney or something like that, where we can't use flash close. And what will happen is we're sending the documents, we're using it on every single one we can do, and almost every other closing, where the buyer will receive the flash close documents. They will sign them the day they go into settlement. So when they actually go to the title company's office, all they're going to do is sign 5 or 6 documents. They're in and out of there in 5 minutes.
Yep. It's very fast.
We've been using this process anyway just to try to increase the efficiencies. But it's been interesting for me to see in the last several weeks where a lot of lenders don't do this. They send a whole 70-page package and they sit around and signs it. But everybody's like, well, what can we do to minimize the personal contact? And so what we're doing is the title companies are putting somebody in a room with a pen and saying, here's the pen, go ahead and sign these 5 documents, all they'll notarize them afterwards, and it seems to be, it's not like closings aren't happening, just people are being sensitive to it, and they're happening a bit more remotely, shall we say, just be with less client interaction. So that's cool.
I've actually had a closing, a couple of closings like that, where just last week we had a closing and the settlement company called me and said, join us by FaceTime. And I did, to make sure, if there were any questions that needed to be answered. And there were a couple of questions that needed to be answered, but they said, we are trying to minimize how many people are in the office. So they're holding a hard line on just those who absolutely have to sign.
Yeah.
Those are the only ones. And that's in part to protect the buyers and the sellers, but also the staff working at the closing office. I do want to mention too, with wire fraud does happen. And so we have to be really, really vigilant as well about how to protect that. So only when you're wiring, make sure you're only getting that information from the trusted people in the settlement office. Do not answer or don't go buy something that you've gotten in your email that talks about, hey, wire me some money. Contact your settlement office and make sure that that's the correct number and the correct information for sending the wire.
Where just to be aware of some other stuff that's happening right now is that I think you'll see this probably occur this upcoming week, is that we have the technology right now to be able to do a fully electronic close. The industry has been resistant to it for a number of different reasons. In addition to that, there's a big training process that we go through the title companies, and there's also the adherence to that the different municipalities are going to have. Okay, and so what we have been pushing for this week has been, and the gentleman who's the CEO of our company is very well respected and well known within the upper management of Freddie Mac and Fannie Mae. We're the second largest non-bank mortgage company in the country, and so we have been on the cutting edge for a lot of years of using technology to make our whole loan process more efficient. So one of the things that he's been talking to them about this week, and it may come about, is the fact that we may find that you're going to be able to have a title company representative be appointed power of attorney for a buyer in limited situations where they can then sign on the buyer's behalf if it ever came down to a situation where you can't close, you don't want to have any personal interaction. Okay, so that may be something that comes about in the next couple of weeks, is that people are going to say, hey, we've got this approved, where now we can have the title company rep sign on behalf of the buyer. Now, whether they're going to want to do that, there's some legality stuff that I can see that title company rep may say, I don't know that I really want that responsibility, and so we'll see how that all evolves. But this is the industry right now is, like I said, is trying, we're all trying to, right, adapt to this situation we've got to try to allow business to still function as close to the way that we've grown to know it, and to allow people to still buy and sell their homes, and so we'll continue to see what these changes are over the course of the next several weeks. It's kind of interesting time to be involved in this.
So the loan application, which has always been electronic. We've got the appraisal part, which has been electronic. Home inspections, I'm being told, I know this is not part of your world there, but the home inspection, which is an important part when we actually can get a home inspection in these very competitive times. And I'm seeing more people talking about, you can do a home inspection because there's not as much competition, even though homes are still selling and people are still out buying. But I did get an email the other day from one of the home inspectors that I work with on a regular basis, and they too, they're adapting to the social distancing and same as the title companies. They're saying, just when we're doing the home inspections, these are the processes that we are putting into place, the same kind of package that they're coming in with the booties. And they've always had the booties, but they're coming in with the gloves and the masks and the whole 9 yards, and limiting how many people are present during the home inspection.
Yep.
So, but then the final part of it is the recording. And so as long as the courthouses remain open as they have been, they're doing e-recordings. And so the transfer of title it's still happening. Monies are still being dispersed. So the entire process is moving along, and without any hiccups at all. It's moving along really well.
Yeah, I mean, it's
minimal delays.
Yeah, I haven't personally had any delays at all.
Same.
On a single transaction that has been the result of anything coronavirus. I mean, everybody seems to be adapting. It seems to be that everybody's being nicer to each other, which is kind of it's kind of a nice byproduct where people are like, hey, we're all in the same boat here. Let's figure out a solution. And get the clients to the finish line. At the end of the day, you have buyers and sellers. They've agreed to do this transaction. We want to try to do everything that we can to try to help them get to the finish line, and everybody achieves their objective. And it just seems like people are a little bit nicer right now, a little bit kinder to each other, which maybe that's a good thing. It's a byproduct of this whole coronavirus, right?
Right.
So I mean, it's going to be interesting. We're going to continue to see changes that occur. Right? I mean, last time we talked, there was no. Last time we talked, whether that was 2 weeks ago, or a week and a half ago, there was no difference in the appraisals. Now you can do an appraisal where we can order an appraisal. An appraiser can sit at a computer in their office and provide us with an appraisal report. It's going to be acceptable. Whereas before, it used to require an interior and an exterior inspection. That's a big difference, So, there's going to be continued changes, that we're all going to deal with. So,
awesome.
Interesting, fun time. Yeah.
Yeah. So one of the questions that keeps coming up is about the economy and about making comparisons to 2008. Talk to me from your perspective. What is the biggest difference between now and 2008?
Biggest difference, 2008, the financial crash, we call it financial challenge, depending on how you want to present that, was brought on by some things were inherently broken in the mortgage market. I mean, loans that when you look back at the loans that were being done then, it goes against the principles of lending that I had learned 20 years before, where you have to show somebody's ability to repay the loan. And how do you do that? You verify their income. But, by 2008, loans were being done where you didn't have to verify people's income. And where people could tell you what their income was, nobody would verify it. Well, guess what? I think some people lied.
Yeah.
And it was all fine and dandy in an environment where if a lender makes a loan for $200,000 on a property and the person lied about their income and they're unable to make the mortgage payments, but the house goes up to a value of $250,000, and the lender can foreclose the property, sell the home, pay off the $200,000 that was owed on it, and although it's a tragic outcome for the buyer, the lender is still okay. So the financial markets then don't have a problem. But if all of a sudden that house that they just lent $200,000 on is only worth $180,000, that's where the problem is. That's what happened. And so you had loans that were being made that shouldn't have been made. And so what's happened since then is that the federal government got involved in the wake of this whole problem and said, okay, here's what you guys as lenders are going to need to do from this point forward to make sure that we don't have another one of these issues. And so what's happening right now is kind of like what happened after 2001. It's hard to believe it was almost 20 years ago, right? But there was kind of an immediate impact. But two months or a month later, the market was back to functioning normal. And it was brought on. If you have something that's brought on by an event, then that's one thing. That's what I feel is happening right now. Is that you've got what's happening right now is brought on by an event. You've got this coronavirus is something that was unexpected, and it's now causing us an impact. What the overall impact is going to be in terms of a slowdown or whatever people are saying, yeah, maybe it does, maybe it doesn't, who the heck knows. But the reality of it is that whatever the impact is brought on by an event. This at some point will pass, and there wasn't something that was inherently wrong with the industry to begin with, unlike what was going on in 2008. So I kind of feel like what's going to happen is that once this whole situation is dealt with, and again, maybe it's a month, maybe it's 3 months, who knows? I don't know when that's going to all happen, but you're going to find that there's nothing that was broken with the market to begin with. The market's going to come roaring back, and whether I say come roaring back, it was already roaring before. Whether it stops roaring or not, nobody knows. But I can tell you that the last several weeks, we in the U.S. have all been really impacted by this. It hasn't stopped roaring yet, and I can tell you that at least what I'm seeing right now is that based on the number of new applications we're seeing and stuff, it isn't going to stop roaring in the next several weeks. I can tell you that. So interesting to see.
Yep, definitely interesting times. Guys, I think if you are considering buying or selling, whether we're in crazy times like we are right now or we're in normal times, you definitely want to work with someone who is a trusted advisor, someone who you can lean on and someone who is, as Rob was just explaining, who's going to get you from the starting gate all the way to the closing gate and get you there and able to respond quickly as things change. Because we never know. I mean, just the way that Corona is teaching us, I have a friend who likes to say, you can plan to go fishing, you just can't plan to have fish for dinner. So, so here we are in a place where, we've been out fishing.
Right.
But a lot of us are still having fish for dinner. And it's because folks in the industry, like Rob, like me, we have adapted. We've been adapting all along, so that when we're in this kind of situation, we're able to really respond quickly to the environment, whatever it is. So, but you do want someone you can trust. And so feel free, you can call me, you can call Rob at any time. We're so happy to help you out. Yeah. Rob.
Hopefully this helps everybody understand. Hopefully this is something I think, when we put this kind of together and decided we're going to start doing these information discussions, who would have ever thought that we'd be having this information discussion?
I know.
It's pretty crazy. But we'll continue to have them and continue to keep everybody informed. And it's hopefully this is beneficial for everybody who watches.
Yeah, exactly. All right.
All right.
Thank you. I know you have things you got to get done today.
I'll talk to you. Thank you. Have a good day.
Thanks, you too.
See ya.
Bye.
Bye.